pull credit, and that's the third thing that's important with doing a loan. They call something called ICE. You've got income, credit, and equity. And when one of those things is missing, then we say that ice is melting and a loan's going to have a problem. Because if you have enough income and you've got enough equity, say you're making $10,000 a month and you've got $50,000 in the bank and you can make that deal work, but if your credit is not good enough, the loan is not going to close. So that's the other third part that you don't know anything about, that you're going to come to us so we can pull the credit, unless you get a score from Credit Karma or on your Discover bill or something like that. But those credit scores do not have much to do with what a mortgage pull is, because a mortgage credit pull, all the mortgage lenders use the same pull, and it's consistent, and it's a model just for the mortgage lenders. So the others are indicators. Like if I'm helping somebody with a credit and I pull up a credit and there's a 540 score, and we know we need to get to 580 for FHA for a minimum typically, or say 620 for a conventional with a lot of money down, I'll tell them to actually pull a Credit Karma that day so they can have an indicator. That score is usually with Credit Karma is going to be higher. Usually, not always. But what happens, that's an indicator that if they go in there and they're doing the things I tell them to do to get their score up, they can go into Credit Karma and say, hey, I'm going in the right direction. So they can tell me, well, if I needed a 620, they might be at a 640 or a 630 on Credit Karma and say, Bill, let's pull credit. So I'll either be asking them and following up, or I give them the power as well so they can follow along with it.
Very interesting.
So that credit's very, very important, because it's going to get you a better rate, and it's also get you a higher LTV on certain programs. With FHA, you can get a 96.5% loan just with FHA down to a 580 score.
LTV is loan to value?
Yes, it is. I should have said
okay.
that, but you're right, loan to value. And that loan to value lets you, like say, if you were buying a house for $100,000, I use these numbers, it's 100% loan to value if you had 100% financing, which there are products out there for that as well. But say a conventional loan at 95% loan to value, that means they're going to loan you $95,000 to buy that $100,000 house. And then you'll have closing costs on top of that. And we can talk about that a little bit later on what that means. But yeah, a better score gets you better rates, no matter, typically with conventional, it doesn't affect government as much, but it also gets you a higher LTV with conventional. With government down to 580, you can get 96.5%. You know, with conventional, you can do 80% down to a 620. A lot of people don't realize that. So that's why sometimes some people think, I've got to have 20% down for a conventional loan, which you don't. You don't. You can get in with just 5% down, and we'll talk about that a little bit later. But that credit is an important point that I will take the time, and that's why I'm a little different than some lenders. I will take the time to have you go over the items of what you need to do to get your score up. And sometimes it can be 2 months. Sometimes it could be a month. It could be something simple. Sometimes it might be 2 years. But I will help you and give you direction on what to do. Now, whether you do that or not, I can't control. But generally, people, when they want to buy a house, they're very open to doing certain things.
They're very motivated.
Right. They're very motivated. So those are the three things that are very important: the income, the credit, and the equity to get a loan approved.
I like the ICE. That's unique. I haven't heard that one before, and that's easy to remember.
It is for me. It helps.
Now I'm going to be thinking about ice melting the rest of the day.
What I'll offer you one is experience. If you look at my card or my signature on my email, my NMLS number is 117604. This is, I think, very important. That is a little over 100,000. And each loan officer has actually got to be licensed by the United States government or NMLS throughout the whole United States. So every loan officer that does loans has got a number. They are up probably between 3.5 and 4 million now.
Wow.
So the lower the number, it shows the longer, at least the longer time the person's been in the business, probably shows that they've got more experience. So I offer that. I am with Prime Lending, and I've been here almost 7 years because of the products that they offer. And I've been with some of the big 3 banks. I've been with a mortgage broker, but we offer over 400 different types of products, the variations thereof. One of them is a renovation product. Most people that offer renovation either offer FHA, which is a streamlined and a full-blown, We offer conventional, we offer FHA, we offer VA. In fact, we even helped create the VA renovation program. It's a streamlined program, but it's something that wasn't out there several years ago. So what I think I offer is basically experience. Personally, and my company offers the products. We're in all 50 states. I can cross state lines with them, which I like, and I can help customers, their families, and so forth, that either are moving out of Virginia into other states, or even coming in, they want to do a refinance there to help somebody here. So I like to be able to help as many people as possible.
Okay. Well, thank you for that.